This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 9th, 2016. Euro-dollar. So the euro rally is now coming into some key internal resistance around 115, and we should expect to see rallies well capped towards this level. Only a break and close back above 115 would really compromise the more choppy to slightly bearish outlook, with the focus then being pushed back towards the 116.17 2016 high. But again, inability to establish above 115 could set the stage for another topside failure ahead of renewed weakness back down towards recent lows at 110.98. Sterling dollar. So cable continues to chop around and is now confined to a mid-range between 143.33 below and 147.70 above. These are very key levels, as a break back above 147.70 would suggest that the market is putting in a more medium-term base, while a break below 143.33 would open the door for initial support at 140, which guards against that critical 7-year low at 138.36 from earlier this year. Dollar yen. So dollar yen doesn't appear to be finished with its downtrend. It is now focused on a retest of the 2016 low from May at 105.55. A break below there would open the door for a fresh downside extension, exposing a move back towards 100 and even a little bit below. Any rallies now should be very well capped ahead of 109, with only a break back above 111.89 to really compromise the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss has seen some nice setbacks over the past few sessions, with the market now gravitating towards some more significant medium-term support down around the 109 to 108 area. If the market breaks down below 108, that'll be significant and force a shift in the structure. However, inability to break down below 108 should keep the market trading within a broader range and potentially put the pressure eventually back towards the top side. So for now, look to see this latest setback be very well supported down towards and ahead of 108. Aussie dollar. So Aussie has enjoyed a nice little rally over the past several sessions, and the market is now closing in on a key 61.8% fib retracement off of the 2016 high to recent 71.45 move, which comes in around 75.70. Ultimately, any rally should be very well capped ahead of or into that level in favor of the next meaningful lower top and bearish resumption. Dollar CAD. So dollar CAD has extended declines after rallying out to 31.89 the other week, and the setbacks now are looking like they could be poised for a retest of the recent 2016 base at 24.61. But at the same time, there is still the possibility of the formation of a base, and the market will need to do a good job of stalling out over the coming sessions to confirm or strengthen that outlook, and more importantly, probably break back above and close above the 28 area to strengthen this outlook. Ultimately, if the market can hold above that 24.61 2016 low in the sessions ahead, we could see a higher low ahead of the next major upside extension beyond 31.89. A break above 31.89 would be significant and open the door for a move towards the 135 to 140 area further up. So we're at a bit of an inflection point here, and we're waiting to see whether the dollar CAD is going to retest those 2016 lows or put in a higher low around current levels ahead of renewed upside. Kiwi dollar. So we're looking at the Kiwi weekly chart here, with the market very well bid and breaking up towards next key previous support turn resistance, medium-term support, going back to those lows that we saw in February of 2015 around 71.76. At this point, the market is looking a little bit stretched on the daily chart, so we could see rallies very well capped in favor of some form of correction before the next push higher. On a short-term basis, a break back below 70 would be required at a minimum to take the immediate pressure off the top side. SPX 500. So the S&P 500 has been showing signs of stalling out after putting in fresh 2016 high the other day at 21.21. At the same time, though, the market is now within a stone's throw of the record high at 21.33, and so a retest of that level and a break of that level cannot be ruled out. We would need to see a break back below 20.85 at a minimum to take the immediate pressure off the top side. Gold. So gold has proven just how well supported it is into dips towards 1200, with the market being very well supported the other week at that psychological barrier ahead of this impressive bounce back above 1250. At this point, an eventual break higher is favored, with this latest consolidation over the past several weeks viewed as a bullish consolidation ahead of the next break beyond the 2015 peak at 1307 and towards 1400 further up. Any setbacks should be well supported, continue to be well supported down towards 1200, with only a break back below 1190 to compromise the constructive outlook for gold.